Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. Can everyone see my screen and hear me? Please go ahead and type yes in the chat box if you can see my screen and hear me. Great, thank you to everyone. Just gonna wait a minute here. We have a few more people trickling in to start the webinar. I think we'll go for about an hour or so. We can take a look at primarily, we'll look at Bitcoin and Ether. Also happy to take a look at BITO, the Bitcoin ETF, and maybe we can look at a few altcoins if there's time and take a couple of questions. But let's begin. So welcome everyone to the cryptocurrency market update. I'm the host, Jason Appel. I co-host the cryptocurrency service at ElliottWaveTrader.net with Ryan Wilday. We also host a cryptocurrency service on Seeking Alpha called Crypto Waves. And for those of you who are coming in from Twitter, I encourage you to check out those services. We provide intraday updates on a lot of the coins, individual coins that we track. The service is primarily focused on Bitcoin and Ether as well, but we also do look at other altcoins, and we do look at many of the crypto miners and crypto stocks. Those have been particularly interesting at various points. So let's start taking a bigger degree look at the Bitcoin chart for some broader market context that helps inform our expectations for more near-term activity. So we have Bitcoin in a larger impulsive uptrend from, basically on an all-time basis, it's on a big uptrend. And where I currently see Bitcoin is that it is nearing in terms of a wave count from an Elliott wave perspective, it is nearing the latter stages of the cycle degree 3 of the super cycle degree 3. Now, in terms of time, these are rather short cycles in Bitcoin, but it's from especially for those of you who are familiar with doing Elliott wave counts, we run out of wave degrees to the downside, or on the let's say granular side of things for smaller time scales when we have such outsized movements. So to be certain, this is rather short as a super cycle wave here that we're describing, but using that for the purpose of nomenclature. But suffice it to say, I see us as nearing a significant high from a wave count standpoint in a wave 3 of 3. And where we are in terms of that cycle degree 3, where we are in that 3 of 3, is that I see us in the early stages of intermediate 5 of the primary 5 of cycle degree 3. So again, yeah, we're in that final fifth wave of the third wave, and we're in the final intermediate fifth of the primary fifth. That's the primary perspective. Now let's take a look at how we've arrived there. I think the key salient aspect here is that when we look at the activity from the 2017 high, we have a major high here, and really looks like third wave activity into that high, quite vertical, and really sort of one-sided action at this weekly time frame up into that high around 20K. We pulled back into the late 2018 low. It's roughly a year-long pullback there that brought price down to about 3,000. And from there, we are looking then for our bigger primary fifth wave. And as the rest of the structure is impulsive, the expectations for this move from the 2018 low to complete the bigger primary fifth wave, that circle 5 there, is that that should form as a 5-wave structure. Well, I think as you can see here, the move that we have so far has very impulsive characteristics. We have a nice 1, 2, and appropriate extension for the third wave. And from there, that's where we've had a little bit of a problem. This pullback into last year's low in November is valid as a fourth wave within an impulse, but is definitely deeper than we would have liked to have seen from a reliability standpoint. Now, we have seen some deeper fourths at the larger degree in Bitcoin. This fourth into the 2018 low at the primary degree was quite deep. Similarly, we have a deep 4 here. But the salient aspect of this is that we only really have what counts best as 3 waves up into the April 2021 high. Now, as an alternative perspective here, you can see what I'm showing in purple. That portends an extension up, a bigger extension in the primary 3 into the all-time highs struck in November of 2021. The issue here is that this would need to count like so. And technically speaking, I'm going to take these lines off. Technically speaking, we do have enough waves in place into the November 2021 high to consider a 5-wave move complete off of the 2018 low. It's rather unsatisfying as a fifth, but it did make a higher high, so we don't have any issues of truncation or anything of that sort. So it's possible to count a 1, 2, 3, 4, 5 up, albeit with a very, very weak fifth wave, sort of normal to shallowish fourth wave, and then a very weak fifth wave. What we were looking for, what would have been ideal from the summer of 2021, would have been, I like where price bottomed, and I'll tell you why. One of the things that we do in terms of how we do our Elliott wave counts is that we are looking for specific areas of support for and resistance and proportion among the varying degrees. So one of the things we tend to see, for example, with a fourth wave, is that they tend to target standard support, let's say, for a fourth wave. Here, we'll put this in a different color, is between the 38.2% and 23.6% retrace of the third wave. And you can see we formed a bottom in June of 2021, was the low that was struck there, right into that standard support region for a fourth wave. But the problem was this, as all of the fifth, is really too small to consider sufficiently reliable as a fifth. Ideally, this would have just been a wave 1 of 5, and we would have seen something like this develop for a bigger 5-wave structure up something like that, that could have taken price probably up north of 200,000 even. One of the other key Fibonacci relationships we would look at is the measurement of waves 1 through 3. We would extend that measurement upwards from the wave 4 low, and we would look around the 0.618 extension. So that would have fallen there at 187,000. So that would have been sort of a more ideal target for this as a fifth wave, where this would have just been this move from the 2021 summer lows into the all-time high would have just been a wave 1 of the intermediate 5. As it is, price came up, made a higher high, and then topped. Now, when we zoom into the daily chart and we look at this, this is a real interesting structure here where I can count this, I can make a case for this being a 5-wave move here. 1, 2, 3, 4, and 5, where we have a pretty extended fifth wave. But I can also make the case for this, as per the black count, as an ABC up at the minor degree. So this is an interesting scenario here where price did make a higher high. It's not reliable as a fifth wave because it's too weak of an extension, excuse me. And similarly, we have an additional layer of ambiguity here, which is that this move can reasonably count as 5 waves or as 3 waves, as I'm showing here in black and in purple. Black showing an ABC. And if it's an ABC up, that then counts nicely. Actually, sorry, this should be at this degree. And so the black count is suggestive of the following, that we have a B wave high into the all-time high, and then 5 waves down in a C wave. C waves are 5-wave structures to the downside, and we have here 1, 2, 3, 4, and 5 waves with reasonable proportion for a 5-wave move in a C wave. Now, similarly, so this is our bigger context here, questioning now this bottom that we established at the November low of 2022 of last year. Our big question is, did we bottom in an intermediate wave 4 and price is going to head up north of 100,000 to finish a more properly extended primary 5 with a clear 5-wave structure off of the 2018 low? Or is this all we get for that intermediate 5 into the 2021 high? So those are our two different prospects there. In terms of the depth of this wave 4 in terms of the depth of this retracement, let's talk about that for a second here. So you can see here I have this 50% line at 15,869. Our standard support is in the 0.382 to 0.236 retracement region. When price lands in that zone and rallies from there, we really have no issue considering it a fourth wave. That's our standard expectation. What's technically valid for maintaining an impulsive view is for price to maintain without any overlap into wave 1 territory. And we have technically achieved that here in the sense that the wave, the low into the November 2022 low did not overlap with the wave 1 high in summer of 2019. As such, this is still valid. The other thing we look at is once we're below the 0.382 retracement, the deeper price goes below that inside of an impulsive context, the more it starts to raise questions or reduce the reliability of considering a fourth wave low that's coming. So based on where we've gotten to at this point, the 50% is about as low as I'm willing to see within an impulsive structure to still consider a wave 4. If price goes below that, granted, in this case, there's not a lot of room between the 50% retracement and the wave 1 high. But below the 50% really starts to compromise the impulsive viewpoint of things. In this case, given that this is not a hard invalidation point, we have a bit of a spike and reverse through it, so I don't have any major issue considering this a fourth. It's not ideal for it to be this deep again with a touch of the 50% retracement, but we don't have any resounding break below that 50%. It's not a meaningful break. It's not a prolonged break. It's a small break, and for all intents and purposes, we can say that this 50% retracement level has held. So at this point, price has done what it's needed to do to maintain the viability of the black count. And based on that, I'm still treating that as the preferred count. That's another way of saying that. It's the primary count, to use more Elliott wave specific language. But I would say that my preference for this is tentative. Obviously, my preference as a Bitcoin trader and investor is that this is a wave 4 low and that we're going to head up from here. But when I say my preference, I mean from an analysis standpoint. I have a tentative preference for the black count, which is that we have a significant bottom in place and that price is headed up over the next couple of years in the fifth wave, the primary five of cycle 3. But we have this B wave resistance to contend with. So let's zoom in a little bit to a smaller chart. So if we are to head up in 5 waves, as we're looking for here in the black count, we have to look at how we might get there. The move we had off of the low initially here, let's take a look at a micro count of this. If I were to count this, I can count this as a possible 1, 2, 3, 4, and 5. And if that's the case, what we would do is we would measure the length of that as our initial wave up, and then we would extend upwards from there. Now what's interesting here is price came up to the 0.764 extension, and so we have 5 waves up into the February high, a corrective 3-wave pullback into the March low, and we have another 5-wave move into the April high, and now we have another corrective pullback underway. So the most bullish interpretation of that would be to consider this a 1-2-1-2 structure. That means that we have our initial minor degree 1-2, which I will adjust here in a second. We have our minor 1-2 followed by a minute 1-2 of minor degree 3. Now the issue here is that when we have our initial 1-2 in place, we take the measurement of the wave 1 and extend that upwards from the wave 2 completion. Now a more standard Elliott wave structure would look like so, where we would be looking for probably a test of the 1.382 to 1.764 region for the third wave, a test of the 1.0 support for the fourth wave, and then our fifth wave would come up to the 2.0. That only takes us to 52,000, and the issue there is that that's obviously too small to be reliable as all of the intermediate fifth. We want to see a substantially higher high above the highs of 2021. And it's also too big to be a wave 1 of wave 5 of 5. So for example, I can't really consider this just a wave 1 there. It's possible, of course. I don't want to rule that out as a possibility, but this is a little bit too high to be reasonable here. If we were to see a structure like this, that our initial 5 waves was to take us up to the 52,000 region, and then we were to pull back correctively. I'll show you how high up this projects here. So 52,000, and let's say we came back to the 50% retrace. In that case, I'll put this in green here. We would be looking for about 325,000 in that case. So that's not impossible, but it's a little bit, it's quite big for this wave degree. One of the things we're doing in Elliott wave is looking for confluence in our wave counts among the various wave degrees. Our bigger count has confluence for, let's zoom back out here. I'd like to see 100,000 reached, and let's see, where are these based off of? That's our 1-2. It's possible in terms of the target for a 3 of 3 to come up all the way up to 460,000, as that's our 1.236. But it would not make sense in this move off of the 2018 low. Even if we were looking upwards, let's zoom back out. Our reasonable target for this is the 0.618 to 0.764 extension of waves 1 through 3. That's 100,000 up to 155,000. So we're looking for how do we get up to that 150 to 150,000 region here? And if we're working on an initial 5 up to 52,000, that's too big for a wave 1. So we have to consider some other perspectives here. One that I found particularly interesting, given that we have a micro 5 up, a 3-wave pullback, and then another 5-wave move and another 3-wave pullback, is to consider the following, where rather than working with our bigger 1, 2, what we will do is label a smaller 1, 2 here. So this will be at the minute degree. And what we'll do, we don't have a confirmed wave 2 low in place yet, but we can make some assumptions about the wave 2 low for now based on retracement. So in this 1, 2, 1, 2 count, our 50% retracement is 24,600. Our 618 is 23,300. So I just put this in between at some local daily low there at 23,900. If that turns out to be our low, and I obviously won't be exactly that number, what we'd be looking for a 1-2 setup off of this for a 5-wave structure is for price to come up probably in the area of the all-time high in 5 waves off of the March low. And from there then, we would be looking for a wave 4 support and then a higher high in the 5th wave. Something like this as a structure overall. So that's what I'm leaning towards as the primary right now. And you can see that I have that shown here in black. I'll talk about the purple and orange counts in a second, but we have a 1, 2, and then another wave 1 and wave 2 in progress. And upon completion of that, we are looking for big extension to the upside, ultimately for a 5-wave structure from this March low to take us probably to the area of the all-time high. Just for the wave 3, we get one more pullback in a wave 4, and then a 5th wave takes us north of 100,000. Okay, so within that structure, let's take a look at the small degree now. We know that our wave 2 pullbacks are supposed to be 3-wave moves that we label as an A, B, and C, and this one is getting quite convoluted here. So we have a nice initial 3-wave pullback right to the upper end of support into this early May low. That counts nicely as an A wave. We have a nice 3-wave move into the late May high. That counts nicely as a B wave. But now we have this problem that we have 3 waves down from that B wave into the June low and now bouncing potentially impulsively from there. So what we would have liked to have seen would have been for price to have developed like this: 1, 2, 3, 4, and 5. That's what we would have wanted to see, but price did not achieve appropriate extension for a 3rd wave and then has bounced far too high for a 4th wave. We can consider a possible smaller degree 1, 2 here and then an A, B, C down for a 3rd wave and now in a 4th wave bounce, but this is really even too high for that to be a reasonable prospect. So we're left with a couple of different potentials here. This is at sort of the moment we're doing this webinar is sort of a moment of maximum ambiguity in terms of whether this is bottomed. If we are to consider it having completely bottomed for all of this circle 2 here, we would have to label it as what's called a WXY. This is something of an irregular correction here. And that would entail, let's see, this would be at the minuet degree. And so WXY is a three-wave correction, but unlike a standard correction that subdivides as three waves down for the initial move, three waves up for the corrective rally, and then five waves down to complete the correction, this would be a three-wave decline to complete. So we would have a series of three-wave moves here. So what I'm showing here in green is a possible count, and certainly with price rallying up in very impulsive fashion off of today's low, we have to consider the possibility. We have to consider this as a possibility. I'm still willing to entertain this as a wave 4 as much as I don't like it. It doesn't have any reliable characteristics of a wave 4, but if price comes back above Sunday's high, this then becomes, well, I want to say if price comes back above Sunday's high on a sustained basis, if we get a little bit of a poke above that, that's okay. But if we make a sustained or meaningful break above this 2,470 level, I can't really continue to entertain this black count. And what remains are the orange and the green possibility here for as subsets of the bigger black count, the bigger 1-2-1-2 count that we're tracking as primary. So the most bullish would be that all of the wave 2 has bottomed here. That's certainly a possibility. It's not terribly reliable until we get a full five waves up. Probably would take us into this resistance region here that I have marked off, 28.3 thousand up to 29.7 thousand. What we would need would be a five wave move up to that level. So, I mean, this is virtually straight up here. So we don't have 1, 2, 3, 4, and 5. And then from there, we would need to see a corrective pullback. If we get a clearly corrective, let me see here, let me put this in green. Okay, so if we get a five wave rally and then a corrective three wave pullback, and then take out the high of this five wave rally, that is our confirmation of the green count. And at that point, zooming back out to the bigger chart, we have a 1-2-1-2 in place, and price can head up substantially in a third wave. That I would say would minimally be targeting about 50,000. Well, I guess minimum target would be about 45,000. That's still a significant ways from here. That's we're talking about a 67% increase or something to that effect from here. So I think it behooves us to wait for some confirmation in terms of being more aggressive about playing the long side, but I'll come back to that in a second. But I do want to say that in terms of how aggressive one plays this, should have to do with a lot to a large degree to what someone's overall positioning and risk tolerances are. Those are the primary factors. For myself, who is a long-term holder of Bitcoin and has a smaller portion of which that I trade with, I exited some in April and have been looking to redeploy those funds in support. I did buy some yesterday with a move down into our bigger support region here, because price has tested this 23.3 to 26.6 zone that we've been looking for a while. But I mean, in terms of getting the rest of a full position size on, I think it behooves us to wait for some confirmation here, because while the green is the most immediately bullish and does entertain the possibility that we have struck a low in all of wave 2, we have another possibility here where, like I'm showing in yellow, where we have an A wave down, similarly to the black A wave. This move up into the May high is just an A wave of a bigger expanded flat B. Because we only have a clear three waves down into this high, we tend to prefer avoiding exotic counts. WXY is should not be discounted in crypto. We see a lot of 333 corrections in crypto. In other asset classes, they're definitely less common. In crypto, unfortunately, they're more common. But for standard Elliott wave counting, we would be more inclined to call this as an A wave bottom here. I'll show this. We have an A low, and now we're coming up in a B. So this would be the case here. We have an A wave down, and now we're working on a 3-wave move for this B wave, where we have our initial 3 up into the late May high for the A wave, 3-wave pullback for a B wave. That's a lower low, which is allowed in a B wave. So this would be an expanded B wave, and then we'd come up in C of B for a higher up into our resistance region here, 28.3K to 29.7K, and that would entail a larger a larger B wave, and then we would come down in a C wave to complete this wave 2. So that's what this is showing here in orange. Bottom in A, working on a B wave up, and then coming down in C. And again, what we need to see to avert coming down in this bigger C here, remember in both cases, whether we're dealing with the green count or the yellow count, if we make a sustained break above 27.5K, we're looking for price to target this region here. And then the question is, do we pull back impulsively from there or correctively? If we pull back correctively, what we'd be looking for is like so, where we come down correctively, and then if we take out that high of the wave 1, that's our confirmation there that the green count is taking place. So at that point, probably it entails entries in the 28,000, in the 28 to 29,000 region, but you're trading for significant upside in that case. I mean, just in the 3 of 3, reasonably, I think we're looking at about 50,000 or so, at least 45,000, but I think 50,000 to 54,000 is probably a more likely target in that. So I'll say it again, but I think it behooves us to be a little bit more conservative at the moment, to wait for some confirmation, especially because this move into the June low from the April high is now very unsatisfying from the standpoint of being a completed correction. So let's just take a look and see what questions. Okay, I have a couple of questions coming in. Guys, if you have any questions, please feel free. Go ahead and post those in the chat box. I will get to them here. Let's continue on though. So in any case, what we've been talking about in terms of this orange count and the green count are all subsets of this 1212 black count here. That is the most bullish interpretation. Remember, our alternative interpretation here is that price is working on a bigger B wave, meaning that we're just coming up in a corrective rally off of the 2022 low, and then price is going to crash probably in if we're talking about the purple count here in terms of timing. If price is unable to exceed this resistance, then there's the prospect of a crash either later in 2024 or 2025 in a big bad C wave down for this primary 4 here, like so. And that can take price probably back into somewhere in the region that we were seeing in 2019 and 2020, if that's the case. So remember, a B wave is going to be a 3-wave move. Given the move we have off of the low, this is reasonable as a 3-wave rather than as a 1-2-1-2. It's possible that we're dealing with an A wave here. And if that's the case, expectations are for a bigger pullback for the B wave. Remember, this retrace support is based on the retracement of the rally from the March low. If we draw the retracement region of the rally from the November low, what we're looking at in terms of bigger support is ranges all the way down to 18,200. The reason it ranges down so low is that when we're dealing with a B wave, B waves often will come all the way down to the 764. I don't think it's reasonable to require that a B wave is holding a 618 retrace here, especially one thing that's positive for some form of bullish continuation, whether it be the black or the purple count, is this move off of the high is really looking quite a bit more corrective in terms of it being overlapping. But if we are to break below the 23.3K level significantly, or if we see something like so, like I'm showing here, where let's say the orange count plays out, or we get a direct lower low here. But then from there, let's say we only bounce correctively and then make another move lower down into the 20K region. Well, that would be what expectations would be like for a bigger B wave. So we have this prospect as well. And so essentially, if that's the case, if we drop especially if we drop all the way down to the March low, that would fully invalidate the 1212 perspective. But even if we come down, let's say to 21K, where the 1212 is still valid, we're definitely on more high alert than for this purple count. And what we would be looking for is a measured move. We'd measure the length of the A and extend that upwards from the B wave. That would likely take us into bigger retrace resistance here, the 50% at 32.6K up to the 0.764 at 48,500. That's our larger resistance region for the B wave. So in both cases, I'm expecting price to get up into that region, and it's really how we get up there, and then are we maintaining support. So just to give a little bit of visibility into this, again, let's say we are bottoming in the wave 2 here. Our expectations then, based on getting a 1-2 here, let's say we're dealing with the green micro count where we've already bottomed, what we'll want to see is a little 5-wave move. I'm going to zoom in here. What we're going to want to see at that point is getting our initial 5 up for the wave 1. And then we would want to see a bigger 5 up take us Okay, so in this case, what we'd be looking for is, we're first talking about our initial 5-wave move. Again, that can take us into about the 28K region, maybe 28.3, maybe up to 29,000 or so. That's for an initial wave 1 of 3 of 3. That's quite a mouthful. If we pull back correctively from there and then take out that high, that's the moment where we consider much more bullish ramifications. And at that point, we're tracking the black count as the primary. You can put this in black, not the purple count. I guess that's the salient aspect here, is that it's the black and not the purple. And what we're looking for then is a wave 1 into the 0.618 extension, a wave 2 pullback, and then a wave 3 higher. Once price breaks above this region here, and this is an estimate about where this is right now because we don't have a confirmed low in place for wave 2. But the key, sorry, I actually have that drawn on. The key region here is this 0.618 to 0.764 extension region of the move from the March low into the April high. So we take a measurement of that move and extend it upwards from whatever low develops for the wave 2. Once price gets above this region, we never want to see price coming back below this for the rest of the 5-wave structure up to new all-time highs. Getting back below this region here, the 618 to 0.764 extension region, once we clear it, would definitely be favoring of the purple count at that point. So what we're going to want to see is basically this is our sort of big pivot support area, and we want to see price remain above that once we make a clear break above the 0.764. Now, obviously, if we haven't bottomed in wave 2 and we see, deeper levels struck for the wave 2, this region will be in a different area here. It can be, only up to 34,000 rather than 36,000. But that is going to be a key region once we break above it, for allowing us to discern between the black and the purple counts. The onus will be on the bullish black count for price to remain above that, the low end of that pivot region there. So, okay, I have a couple questions here about Bitcoin. Let's take a look at this. Isn't it not alarming that the October 2023, October 23rd wave 4 bottom is deep since the wave 2 is shallow? Good question. So I think you mean the November low of last year. So one of the things, wait, isn't it not alarming since the wave 2 was shallow? Well, the wave 2 isn't shallow here, unless I don't think I know. Okay, October of 2023 hasn't happened yet. The wave 2 was quite deep here into March 2020. This is similarly a deep wave 4. I think this question is probably addressing what's called the idea of alternation between the wave 2 and the wave 4 pullbacks. It's not a rule per se, but it's more of a heuristic. One of the things we see in Elliott wave counts is oftentimes with a deep wave 2, we see a shallow wave 4, or with a shallow wave 2, we see a deep wave 4. It's an interesting heuristic, but I would not look at that as primary over counting waves and Fibonacci extensions and general structure and proportion. And so while both of these pullbacks in the primary count, the intermediate 2 and intermediate 4, are both very deep, so to speak, I don't view that as problematic. As far as I'm concerned, price has done what it's needed to do to tentatively favor a bottom in the intermediate 4, and that we have a 5 up and 3 down, and then another 5 up and 3 down developing from the November low, has me looking at this, has me favoring a very bullish perspective here. So, but essentially going to be looking for something like this. Okay, so that's it for Bitcoin here. I think that covers us pretty well. Okay, I do not understand how the yellow count will fit into the purple count. Great. So if we get the yellow count where we come up to 28.3 to 29.7 and then come down, the question then, will that be all of the wave 2, or will that be a circle A of a bigger B wave? So the question then would be, if we get this yellow micro interpretation here rather than the green, that means we come up above 27.5K, we come into this resistance region, and then we fall back into the 23.3 to 26K region, which was our support for the bigger wave 2. Price needs to prove the black count from there. We'll always continue to need to do that, but it needs to get 5 waves up. If instead we get a corrective move back into resistance and then drop down deeper, this purple C can just be a C of circle A. Sorry, this orange C can be part of the purple A rather than all of the black 2. Okay, let's see other questions here. Just want to get a general check-in with everybody if this is making sense here. I mean, this is a lot of detail to be looking at the subsets of different counts. I know, many of you who are in here from Twitter are probably not as familiar with Elliott Wave as some of our members are, but just want to get a general check-in if people can confirm that this is making some degree of sense here. I will say that Elliott Wave can be complicated indeed. So, okay, great. I'm getting some indication here that this is making sense to the Elliott Wavers amongst us. Great. We're going to move on here and take a look at Ethereum. We'll look at a bigger degree chart just for some context first. We have a similar prospect here like we have in Bitcoin. The move from the 2018 low really counts better as just 3 waves up. Now, Ether has a sort of an unusual thing going on here where relative to Bitcoin in the sense that our retrace into the June 2022 low held as the low. In Bitcoin, we got a dip into the 2022, into June of 2022. We made a corrective bounce and then made a significantly lower low in November, whereas in Ether we held a higher low. Also of note is that for all intents and purposes here, Ether has held the necessary retrace support for a 4th wave. So there's no real concern about what I'm showing here as a completed 4th wave, because the depth of this is quite within standard expectations for a 4th wave. The issue that Ether has in terms of the black and the blue count here. So let's notice what I have. I have a black count on Ether, which is looking for just a bigger B wave in development and then to fail down in a C wave. The blue count here has an expectation of taking us to higher highs, but I do not yet see a very clear path for price to get up to higher highs. Remember, in terms of our expectations of a higher high, what we'd be looking for here is based on taking a measurement of waves 1 through 3 and extending that upwards from the wave 4 low. And that entails, I would say, if we get a 50% extension up to the 764, 6,800 to 20,000. I'm looking at the lower end of this region here, which is the 0.500 to the 0.618. That's 6,800 up to 11K as the general target region here. I do target boxes on my charts in yellow. So that's what we're looking for generally if price is going to be heading to a higher high. Now the question is, how are we getting there? Let's take a look at this move off of the June low. First off, we have an initial rally into the August high. It's not a clear 5-wave structure. It's ambiguous whether we're going to count that as 5 waves or 3 waves up. From there, we have a corrective 3-wave pullback into the November low. And from there, we have really what counts best as 3 waves up. We can count this as 5, but let's take a look at this overall. So if we're going to let's look at the blue count here for a second. Okay, so the blue count entails a series of 1-2s. We call these nested 1-2s. So we have the bigger minor 1-2, then we have another minute 1-2, and now working on another 1-2. This is getting a little bit far-fetched, I have to say here, in terms of not seeing a major breakout. And if we do follow this count, we would need to see some rather large extensions to the upside to take us all the way up to this 6,900 region. So we would need to see roughly what I'm showing here in blue. So this is how this would shape up. We have a wave 1 into the August 2022 high, wave 2 into the November low, and now another 1-2 developing. In terms of the extension here, yeah, this is too high to consider an extension within this wave 1. So we have a little bit of an unusual structure here. I cannot say that what's showing here in blue is a highly reliable perspective, but for those who are very bullishly inclined on Ether and are trading at this bigger zoomed out degree, this is what we're looking for here. Basically a test of support, price to come up, similar to Bitcoin essentially. We'd be looking for price to come up in the area of the all-time high for the wave 3, get one more 4, and then get a fifth up to the 6,900 level. But as I'm mentioning here, when we zoom in to the smaller time frames, this is a little bit unsatisfying as, again, we don't really have a great 5-wave move here into the August high. We don't have a great 5-wave move here into the February high, and we don't have a clear 5-wave move into the April high. So the micro count definitely leaves something to be desired. If we look just at the bigger one too, suggested by the move from the August high, from the June low to the August high and extended up from the November low, the 2.0 of that move takes us to a slightly higher high here. Again, I don't want to rule out the blue count, but I do want to say that this is definitely not playing cleanly according to proportions that would give us a much more high confidence expectation of price heading up to new all-time highs. Okay, let's talk about the black count here. Now, I don't think it's likely that the Bitcoin chart will have its black count play out, taking it to new all-time highs while Ether heads down to 400 to 600, but anything is possible. But let's talk about the black count and what that portends for price. In the black count, we consider the initial rally to the August and A wave high. That is quite reasonable. The depth of the pullback is reasonable for a B wave. And now if we're heading up in a C wave, it makes sense for this to be heading up in an ending diagonal. And the proportions that we're seeing among the wave degrees are favorable for this ending diagonal view of things. That would be that we have our wave 1 and our wave 2, and now we have an ambiguous move, a move of somewhat ambiguous structure up past the 0.764. This can very reasonably be the A wave of a third wave in a diagonal. We are working on the B wave still. We don't have a satisfying low in place at today's low. So this is more or less what like the purple count, or sorry, like the orange count here, where we have the A wave low, we're heading up in a B wave, and then we'll come down in C. And from there, we'd be looking for a test of support that's in the 1530 to 1750 region. From there, we can look for our C wave up to 2500 to 2700. The expectation then would be a pullback into support in the 0.618 to 0.764 region, and then one more high around 3000. And then we can see a significant decline in a C wave. So again, it's a mixed bag here in the sense that this move into the June low really is not far-fetched, or really has nothing problematic about it for considering a fourth wave here. It's just that the action since then has not been terribly favorable in terms of giving us a high confidence setup here to trade for this 6,800 plus region. So, any questions about Ethereum? Do I consider BTC to be the strongest chart per Elliott wave? No, we'll take a look at a couple of the altcoins. I also want to take a look at BITO. This is showing, interestingly, this is a Bitcoin ETF here, and this chart does not have all the history of Bitcoin, for example. So we're really just counting it from the November low as its all-time low. Oh, here, wait, I'm going to put that in extended hours. Yeah. Okay, so similar to Bitcoin, I'm going to put this in red here because I have a different, I don't want to confuse this with the orange count from the other chart. Okay, so let's talk about the counts in order here. We'll talk about the black count first. Again, we have what counts reasonably well as a 5-wave structure off of the low. It's not the most ideal 5-wave structure, but it is reasonable for a 5-wave move for a minor degree wave 1. We have a very nice wave 2 pullback, so that all looks good. From there, then, we have a move all the way up to the 1.0 extension. That's always concerning for a potential ABC up, which would be more in accord with this purple count for an A wave. But what I'm showing here in black is more or less meant to align with the Bitcoin 1-2-1-2 count, where we have a wave 1 to where we have a wave 1, a wave 2 into the March low, and then we have a very extended wave 1 of 3 into the April high, and we've been coming down from there in a wave 2. When I zoom in to a smaller time frame, unlike Bitcoin, which does not count nicely for considering a low in place here, on BITO, this counts very well in the sense that we have an A wave down, a B wave up, and then we do have what can reasonably count as 5 waves down into this week's low for the C of 2. So BITO probably makes the strongest argument for a 1-2 for a significant low of some sort in place here. Now the question then, and when we look, price bottomed basically right at the 0.618 extension. For those who have been following this in the room, since May, I've been looking for a test of this lower 14s region, and we did get it today, which offered a very nice long entry. So for the black count, what we would do at this point, if we're considering a 1-2-1-2, is we will do our Fibonacci pinball extensions from the March low, again, because this smaller degree circle one is just too big of a wave to consider that to get really clean Fibonacci pinball. So instead, I'm going to do a 1-2 from the March low. So we measure the length of the circle 1, extend it up from the wave 2 low. That would target the 2560 to 2830 region for 3 of 3. We could pull back to 2175 in the wave 4, and all of our wave 3 can take us up to 33, at which point we'd be looking for one more 4-5, which could take us all the way up to the 43 to 51 region here. So that's quite interesting. And we have a great reaction off of this 618 off of a potentially completed pattern here. Now, obviously, as this is something that's meant as a derivative of sorts to attract Bitcoin, if Bitcoin does get a lower low, or if Bitcoin does follow the orange count, for example, where we get a decent rally from here, but then crap out from there into later into June or into July or August in a bigger C of 2, I have a hard time seeing BITO not following suit with that. But again, we do track each chart on its own, and BITO is making a good argument for a low of sorts in place. The other very bullish alternative I have is in red, and that is that we are working on a bigger 5-wave move up to the, let's say, the 28 to 30 region as a leading diagonal, as a larger leading diagonal wave 1. So that would be like so. And that would be at the minor degree. So in that interpretation, which probably is the most clean, we have our initial wave 1. It's not a problem then that this is not a sort of an optimal 5-wave move here. That works as certainly well as a wave 1 of a leading diagonal. We have our wave 2 pullback. Then we have what counts nicely as an A wave into, let's zoom out a little bit here. So again, in this case, what we're going to do is we're going to measure the length of the 1 and then extend that upwards from the wave 2 low. We have a move into the 0.764. That's textbook for an A wave within a leading diagonal. So that's a textbook for A of 3. And then we have a corrective pullback into retrace support for B of 3, and now we're heading up impulsively. So I really actually quite like this red count for BITO, and that would entail that we're forming a low here and heading up to the standard target would be the 23 region. A reasonable extension would be up to the 25 region. What we tend to see with diagonals is a 1-2. Our A of 3 touches the 0.764. It targets that region. We get a corrective pullback in B of 3, and then our C of 3 targets the 1.236, at which point we're looking for price to come back, probably around this 0.618 extension for the wave 4 and get a fifth wave higher. So BITO is looking quite interesting in terms of playing alongside. Okay, next, so we covered that. I want to take a look at a couple of the different altcoins which are interesting here. I definitely want to look at Mara just because it's something that is quite it's quite in demand. There's probably more discussion of Mara in our room. That would be Marathon as one of the crypto miners. There's more discussion about Mara than just about anything other than Bitcoin. So let's just zoom out to a larger perspective here on Marathon. So Marathon's interesting. We have a potential 5-wave move. We have the similar issue about this 5th wave that it's quite weak, like we have in Bitcoin or Ether. You know, that higher high is not entirely satisfying, etc. We have an additional issue in Marathon, which is that the move off of the all-time high counts better as a 5-wave move to the downside. So if we're considering this 5 up, this 5-wave move to the downside then would probably have to be considered an A wave. Our alternative is to consider just a 3-wave move to the upside here in Marathon, like so. Which actually makes reasonable sense here. And that would be like this. We have a primary A wave as an A, B, and C. And then from there, our 5 down, I should probably just do this in blue because I have my other blue count there. Okay, so that would entail then that we have an A wave down, a B wave up, and then our 5 down is a bigger intermediate C of B. Okay, so those are our two contexts here. Again, if we are counting 5 waves down off the high after 5 up, as shown in the black count, that means that this is an initiation move and that our bigger rally that's developing from the December 2022 low is as a bigger B wave, as shown in black. In blue, we have the context that we bottomed potentially in a larger B wave, and that would entail, if that's the case, that we're looking for a C wave up. It's pretty outlandish to talk about it, but a measured move takes us up to a measured move, meaning if we measure the length of this A wave, oh, that's not exactly correct here. Let me adjust this. Based on this count, if we measure the A wave, extend that up from the B wave low, we're talking about a move up to 438 in Mara. That's quite outlandish, and so obviously has a very, very long way to go if we're going to see those levels. As Ryan and I tend to tell our subscribers in Crypto Waves and the crypto room at Elliott Wave Trader, it tends to be better to approach what we refer to as moon counts with a good deal of skepticism until there's a compelling reason to be playing for that. So right now, the move that we have off of the December low does definitely definitely gives us confidence of some extension to the upside, meaning that we don't think that we've topped to a significant degree at the April high and are expecting to see higher. But let's review the two perspectives here. So the first we'll review in black the prospect that we are in a bigger B wave here. That would mean that the initial rally into January was an A wave up, and where this is complicated here is that we had a nice three-wave pullback into the March low. That ideally would have been the B, and potentially can be here with the way this is shaping up. We'll talk about this problematic area here in a second. So I would say we have a potential for something like this. As okay, so our measured move target region based on the AB is this 1.0 to 1.236 region. Let's mark that and take that off so we don't have too many lines. And then if we're going to consider this a 1-2 off of the March low, we have three waves up into the 1.0 extension. It's possible that we could consider that a extended A of 3. So what I'm showing here in black is the most immediately bullish perspective here. I don't really favor that we have a bottom in a significant bottom in place. This region is very problematic here, given that we have what looks like 5 down and then a basically sideways consolidation or a triangle of sorts. I think generally when we have these sort of triangular consolidations or a block, we tend to continue in the direction in which price entered into that. So given that we came down into that, I'm still expecting lower, but this would be the most immediately bullish perspective, which would be that price is headed up in C of 3 to the 1520 to 1745 region. We would then come down in a wave 4 and then head up in a fifth wave, and that would be our C of B. Zooming back out to the bigger degree, when we measure the Fibonacci retracements from the high. So that's reasonable here, is that our resistance region here is, I would mark out as the 50% up to the 0.764. Okay, so in the most immediately bullish path, we can be heading up in the C wave. What we'll need to do that is we will need a 5-wave rally, and then a corrective pullback, and then a takeout of the high of the 5-wave rally. So in other words, we'll need a little bit higher up in a wave 1. We want to see price exceed last week's high. We would need a corrective pullback, and then if we take out that high, we'll be forced to adopt this more immediately bullish black count here. Okay. Coming down, I'm going to show another version of this chart here. And I think what I was tracking is the orange count on Bitcoin makes quite a bit of sense here as well. That would be that if we don't fall in more immediate fashion, that we have like so. We have an A wave down, working on a B wave up, and then a C wave down from there. So Mara does not really offer us a good short-term trading cue here. Again, what we really need to see to get more aggressively bullish in the short run here is we need to see a 5-wave move. I'd like to see that come up again, clear these sets of highs here. So we have 1050 to 1075. See that region cleared, then pull back correctively, and then take out that high. That would get me more immediately bullish. Otherwise, even if we do clear these sets of highs here, this can just be a bigger C of B, and then we come down in a bigger parentheses C wave here. Now, if we come down like that, so just show this on the chart. In that case, we also have the possibility of like so, where we have an initial A wave up, and then this is a B wave, and then we head up in a C wave here. So I think in terms of Mara, we have a long way to go to determining what this bigger move off of the December low will become. But I think the salient aspect here is that I'm still looking for a move down to the 7 region, whether it be as, count this like so, whether that be as the B wave in black of a bigger intermediate B, or whether it be in blue count. Sorry, I didn't review the blue count. The blue count shows the prospect of a bigger leading diagonal forming. So we have our wave 1, our wave 2, and A wave to the 764 working on a B of 3. Our C of 3 would probably target the 1.236, pull back in a wave 4, and then get a 5th wave higher. If we get all 5 waves up as per a leading diagonal, granted, that's a huge move from here, and we're talking about getting to the 30 region. But from there, that then gives us the perspective to play for a much bigger move in Mara. If we get the blue count, we then are looking at where did the main Mara chart go here? This is it. And this would be a 1, 2, 3, 4, 5. So I don't think there's any reason to get concerned about, Mara going all the way up to 400 now and you not being on board for it. This is getting ahead of ourselves here. I'm just showing the potential that if this move from the December low develops into a bigger 5-wave move, it does set up a potential enormous moon count in Mara to take price up substantially here. Again, for the meantime here, what I'm favoring, I would put this in green. I'm favoring that price will make its way back down into this bigger support region in the 7 region, whether that be as the circle B within the blue leading diagonal count, or the bigger minor degree B in the black corrective count to take price up to the 20s for the bigger intermediate B. Sort of a difficult one to show with all of the different possibilities there, but is there any questions about Mara? Because that was a little bit of a complicated one. Okay, with these Bitcoin related charts, do you always count using the extended hours trading data, or both RTH and extended? My default is to chart using all data. Occasionally, I will discount after hours data in some of the stocks if there are moves that are really low volume that do not fit into a larger degree count. But I'm cautious about discounting those at just looking at the regular trading hours for the purpose of discounting some unusual aftermarket activity. So, okay, when you mentioned a path could follow a leading diagonal before it starts, how do you know? What do you make? Why do you think it could be a leading diagonal? Well, a couple of reasons. So first off, one of the reasons Elliott Wave is a very powerful tool is it gives us context for action on all degrees. And so there's occasionally times where we have a very clear perspective at a large degree, and the way the small degree is developing is, let's say, too big for an impulsive wave one to be a good fit with the larger degree. So we may be on the lookout for a leading diagonal in those cases. Another thing that would have us on the lookout for a leading diagonal is if our wave one, so like in BITO, for example, BITO, where we don't really have a clear 5-wave move here. Again, this looks like a little 3-wave move, and then it looks like a 5-wave move from there, where we have a very lopsided ABC to start a move, meaning if we're going to count this as a 1, 2, 3, 4, and 5, this is sort of problematic. This isn't really a good 5 up. If we're counting this is the 1, 2, 3, 4, 5, our wave 1 is a 3-wave move, and the rest of the structure is 5-wave moves. So that's sort of problematic as well. So instead, what makes sense here is something like this, where we have a small A and B and then a big C wave extension. That's reasonable there as a wave 1 of a leading diagonal, especially then. Now, granted, this could just be a bigger A wave. We get the corrective move in what could be a B wave as well there. But then when we get a 5-wave move up to the 0.764, that looks like an A wave, and that we get a corrective structure from that on the downside is has this looking more like a 1-2 AB at that point, based solely on the Fibonacci extensions. Again, as I'm showing in black, it can be a 1-2-1-2, but based on what really probably looks better as an ABC with a very extended C wave into the February high, a corrective pullback, and then a swift move up in to the 0.764 extension, and then breaking below the 618, but doing so correctively. That's all characteristics of diagonals there. So, okay, just an FYI that the orange is very hard to see. Thank you for the feedback on that. I do appreciate that. I'll zoom in on it here, but I understand that some of these colors can be difficult. And when we get complicated like this, it's certainly the charts get certainly a little bit busier than I would prefer. But again, regarding Mara, until we see a 5-wave move up, a corrective retrace, and then a takeout of that 5-wave move out, meaning that we would get a wave 1, a wave 2 pullback, and then take out the wave 1 high, I'm more so leaning in the camp that Mara can see another deeper pullback here into the 7 region, and that and that we're still essentially consolidating in this move off of the April high. So, lastly, let's take a look at Matic and Binance Coin. Binance had some interesting news this week. So we'll zoom out to the bigger degree on Matic. So I don't know what to make out of all of this sort of early exchange activity here. So I'm counting this 2020 low as my 0 point. But we have a really good 5-wave move up to start, a 3-wave pullback, and then an enormous extension in a wave 3 here. And for example, when we count the 1, 2 here, you could see that we've already come up to the 3.382 extension. But when you look at it, this really looks like a 3-wave move. We have a wave 1 and a wave 2, and then we have an enormous 3 of 3 here, like so. Price came down into an A wave, made basically equivalent highs into the December 2021 high, and then we have a really clean 5-wave move down in a C wave into the June 2022 low, and like Ethereum, that low has held. Also, when we consider retrace support, remember we're looking for the 0.382. This came right down to the 0.382 and bottom there. So Matic was a really good candidate for getting a higher high in a fifth. It is taking shape in more protracted fashion than is ideal, but off of the June low, I have somewhat unusually proportioned, but the cleanest interpretation of this move from the June low is 5 up into the February high here. When we take measurements of this, so for example, we have a 1, 2, 3, 4, 5 up, and then we are looking at our retrace resistance, or sorry, our retrace support is the 0.618 to 0.382. Price is now in that support zone, and we have really pretty textbook action here. We have an A wave pullback, a pretty small B wave, and now we're coming down impulsively in a C. We have a wave 1, wave 2, wave 3, and wave 4 coming down in wave 5. I would be looking, I think it's potentially the case that price will come down and target these different series of lows here to complete the two. So we have all these lows here. Yeah, 74, 71, 68. I could even see sometimes in our wave 2 bottoms, we see some slippage to the downside. I would not even be surprised to see some overthrow down to the low 50s here, but essentially this is shaping up really nicely as a 1-2 setup off of the June low. This is oddly enough one of our best, this may be the best chart across the space actually, and does portend a move in 5 waves somewhere between the 419 and 4, what are these reaching here? 420 and 785. Similarly, we want to just check that out by measuring waves 1 through 3. So we take a measurement of waves 1 through 3, and then we extend that upwards. And you can see here that our 50% extension, that would mean that wave 5 is 50% of waves 1 through 3 is up here at the upper end of this target region, that 4.0 extension. I could really even bring this all the way up to about $13 here, which is an enormous move. And if we look at the extensions from a possible 1-2, let's take a look at that to see what alignment we get. So we measure the length of our wave 1. Let's say our wave 2 bottoms in the area of around 69 cents there. Yeah, in this case, we're talking much higher here. We could see, yeah, in this case, we could see Matic getting all the way up north of $10 here, which should be quite interesting. So Matic is definitely one of my favorite charts here in the crypto space at this time. I will say, in terms of sizing, Ryan and I are both cautious, and we promote caution when trading altcoins. Generally speaking, there's nothing that's really should be considered a safe investment or really investment grade trades in the crypto space other than Bitcoin. So we tend to view everything else as a trading instrument, and so I think Matic is setting up for a great trade, but the guidance in terms of sizing is to make sure that you're keeping altcoins probably at no more than 20 to 25% of your overall crypto holdings. Granted, this does have the best setup, but I personally am inclined to treat the alts with a grain of salt. Not that doesn't mean that I don't trade them, but it means I'm not inclined to size this at a level that I would size Bitcoin at in terms of trading upside here. But again, from a risk to reward perspective here, so long as we're holding this support region, Matic has a beautiful 1-2 setup to the upside here. Where I would view this as problematic, where we could start heading down for something much more bearish is if price is unable to hold this 41 to 45 region. That would be getting too low for a wave 2 to be the most reliable perspective at that point. Any questions about that? Okay, we have a couple questions. Yeah, the recording will get posted both to the for all the crypto subscribers that we have. I don't yet know if the video will be available publicly. Well, that'll have to be some discussion, but it possibly will be available publicly. So. Do I consider Mara investment grade? No, I do not. I consider Mara a phenomenal trading instrument. I do trade it quite regularly, and occasionally we'll hold it for decent amounts of time. For example, um, I got Mara in this box here in July of 2021 and held it all the way up into the highs there. So I don't know, what is that? That's a, what is that, about a 4-month holding period there. Yeah. So, but I don't view any of these as like, you buy them and come back to them in a decade. A lot of investors are who are doing less active investing are looking just for major pullbacks in the bigger index ETFs, and so they'll buy SPY or QQQ on major pullbacks, and then they won't be doing much in the way of position management for years and years at a time. I don't really view anything in the crypto space as like that. The exception to that might be Bitcoin, but again, given the volatility in Bitcoin, even if you're going to do that, it really does not behoove you to be holding a huge proportion of your holdings through bigger corrections. I mean, as we saw, just to comment on this for a second, I'm going to digress here, but from the November 2021 high, 70,000 down to 50,000, that's an enormous decline there. I mean, you're talking about, I don't have a calculator, it's in excess of 70%. This pullback from 20,000 down to 3,000, you're talking about 85%. So even is the case with Bitcoin. I have a certain amount of Bitcoin, a small amount of Bitcoin, and a small amount of Ethereum relatively, that I have more, that I'm more or less just holding for a very long term. But in terms of managing your trades a little bit more actively, even if you're doing bigger swing trading, when we get to a top of a major intermediate high or a cycle high or even a minor degree high, it definitely is. I view it as necessary to take some profits, really just because these drawdowns are just too big. It's not really, I don't know about you, but I don't consider it okay to have 100% of my trading portfolio, that 100% of my crypto trading portfolio subject to 70% drawdowns just because I'm looking at it as a fourth wave. So, but I digress from there. I think Mara is an excellent trading instrument, but I'm not, as it's a trading instrument, I'm not really concerned about making sure I get every last penny of it. I'm really just looking for more or less clear trade setups. So, for example, if price does just head up more directly, I don't know how much I will be a part of it. Whereas if price does come down into the 7 region, like I'm looking for in this orange micro count, then I'm much more keen to play for upside from the opportunity of being able to get it, buying it cheap into support with a clean setup. So. Okay, let's take a look at Binance coin here, because we said we would talk about that. Binance is one of the altcoins like Matic that has a really nice 1, 2, 3 off of the December. So in Binance, we have 3 waves up off of the 2018 low, where in Matic, we have 3 waves up from the 2020 low. And this is another coin that is similarly held well. In Binance's case, this is held well above support. So the 382 retrace of wave 3, so that would be the 382 retrace of the move from the March 2020 low into the May 2021 high, is 110. So we haven't even reached that level. The pullback that we got into June of 2022 really in some ways counts better as an A wave from a Fibonacci pinball perspective. This is what we tend to see for an A wave. It comes down into the 0.236 retracement zone. Definitely can have some overthrow. It's not so precise. Then we get our B wave up, and then we get our C down into the 38.2%. So that is what I'm watching for as the primary perspective in Binance, that we're underway in a corrective rally that should eventually get us down into the 100 to 120 region, and that can set up a wave 4 low and take us higher into new all-time highs for, I don't know what's happened here. Those are way out there. And that can take us up into new all-time highs for a fifth wave at this parentheses degree. The blue count though, okay, so let's look at the black count. If we're in the black count, we have this sort of amorphous move off of the June 2022 low into the November 2022 high. I could force a 5-wave move on that as a 1, 2, 3, 4, and 5. I'm pretty content to call it an A wave. From there, we have a pretty clear 3-way move down in a B wave, and that looks to be setting us up then with a potential C wave higher. Based on the Fibonacci extensions, that it's reasonable that this might take shape as a leading diagonal. So we have a wave 1 developing. Our retrace support for wave 2 is 260 to 287, and we're right in the middle of that. And we'd be looking for a 345 in that instance to take us up to 480 to 575, or 475 to 575 roughly. So whether or not we're dealing with blue or black, I think that Binance has a really interesting trade setup here to start looking at potential longs. I think it's reasonable that we may come down and test the March low here. That is near the 0.618 to finish off this black wave 2. Yeah, we could have something like this at the micro degree. We have 1, 2, and 3. We have a 1, 2, 3, can bounce in a 4th and get a 5th wave lower. Okay, so that's the primary perspective for Binance, though, is that in either case, I'm expecting a bottom to form in this 260 to 272 region and to take price up to the 475 to 575 region. Now, I have this blue count as a more bullish alternative. This move off of the June low into the November high, as I said, is very questionable as a 1-2, but it is a possible interpretation. I can get a 5-wave move off of the December low into an appropriate extension for a wave 1 of 3 as shown with the blue circle 1. So if we're setting up a 1-2-1-2, that would entail then that we would still come up to this region here in the third wave, probably to the upper end of it around 575. But rather than breaking down strongly from there, we would be looking for just a little corrective retrace and then a wave 5 of 3 up to 770 plus, and then another 4-5 to take us to new all-time highs. And based on where this is landing here, I would be expecting, minimally that if we get this blue count, we'll see some extensions past the 2.0. I think it's reasonable that we'll see price up, 1400. Ideally, I'd see us at least at 1750 if we take that more direct path. But in any case, in terms of playing this, I think this offers an interesting potential long opportunity here, and de-risking a little bit in this region and then waiting to see how price backs off from this region. We pull back correctively. It gives the opportunity to play the upside for the rest of the structure, to play the 5 of 3, de-risk for the wave 4, and then play the 5 higher for the new all-time highs there. I think, as many of you know, there was news this week that the SEC is suing Binance for something in the realm of operating an exchange dealing in unlicensed securities. So keep in mind, if you're trading this, there certainly is some tail risk to this. As always with altcoins, you don't want to be looking to go all in, and especially in this case, having stops in place is paramount, because there's no telling what one of these news events might do to this. I'm not saying that I don't think that the charts are valuable in relationship to the news, of course, but I will say that if we do see some sustained break below 240, this becomes concerning around any immediate upside continuation from the June low. Technical invalidation is 220 though, but if we're below 240 and then below 220, at a minimum, I see us going down to this 100 to 120 region there. So again, when we have a 1-2-1-2 setup, or we have an A-B and 1-2 setup, as is the case here in Binance, it does give us some reasonable confidence as far as looking at this from a charting perspective, that we will get upside, but it's by no means a guarantee that this will play out. And so again, all this is a good risk to reward opportunity for a trade setup to the long side here. You have good skew. Even if you held to invalidation here, you're talking about 200 points to the upside as the minimum target, and 60 points to the downside. So, okay, that's it for all the content I intended to present today. Question, do I include ETH in my overall alt exposure of 20 to 25%? Carla, just to be sure, the max percent I would say for alts is 20 to 25%. I mean, ideally, sometimes I'm, maybe around, 5% in altcoins, or 15% in altcoins. So I'm saying 20%, no more than 25% should be, is what I consider to be my maximum altcoin exposure. And I do not include Ether in that. I sort of have Ether in its own class. I primarily hold and trade Bitcoin. Altcoins are no more than 20 to 25% of total crypto holdings. Ether can be Ether might be 20 to 25% on its own, but I don't include it in altcoins, and also will not tend to, especially at the investment level for what I hold, is nowhere near the size of Bitcoin. So, okay, question. So of course, GBTC or ETHE or BITO, all not considered investment grade. Yeah, they're too young of instruments, I would say. We have, I don't know what our exact number is here, but we have probably somewhere between 1,000 and 1,500 people that are subscribed or following our crypto analysis, and I certainly, that certainly encompasses a broad array of different risk tolerances here. There's younger people that we talk to who have, maybe 100% of their net worth in crypto assets, and there are older people who do trade some crypto who have 2 to 3% of their net worth in crypto assets. It really depends, upon sizing and risk tolerances and such. But I would have a hard time, calling any of these instruments really investment grade. So, okay, question about Matic. Is it possible that the third extends more than 1.618 in the bull run? It certainly is possible, but Matic, I think, I'm less inclined to believe that it will, especially that my larger time frame, I'm really looking for a top probably in this. I'd like to see at least the 4.2 region struck, but probably looking in here into the into this 0.500 to 0.618 here. Let me extension of wave 1 through 3, and based on the 1-2, that would entail probably a smaller third wave. I don't think it's likely we see big extensions in the third wave here in Matic relative to the 1-2. But in terms of skew, I mean, this is enormous. We're talking about a move from 82 cents up to 640. I mean, that's, you're talking about an 8x move there, to what is sort of an ideal target for this. But based on this shaping up as a possible impulsive 1-2. It does project us higher, but again, this can always morph into a diagonal, which would make us look more like this then. So, okay, I'm going to cut us off for questions here then, because I don't want to get too extended here. We're already into past an hour and a half. Can I please comment on Solana? I think, yeah, let me pull up my Solana chart here. I won't be taking any other requests, but I will take a look at this as this is the last question here. Okay. Okay. Let's take a look at what we have at Solana. Solana counts really nicely as a completed 5-wave move into the all-time high. We have a very nice, I'll zoom into a daily. We have a nice 1, 2, 1, 2, 3, 4, 5 for the third wave, fourth and fifth structure. So we have a really nice setup there in Solana for 5 up. If we were dealing with a stock of some sort, some company with a lot of history, I would probably be much more strongly inclined to get really bullish on this with a nice 5-wave move to the upside. Again, we've seen this in crypto. We saw a lot of this in 2017. There were a lot of charts that made excellent 5-wave moves and really just never bottomed in a wave 2 and have never recovered their high watermark here. And so this is always a concern with the crypto projects. Additionally of concern is from the all-time high, our move down into the 2022 low really counts better as a 5-wave move more than anything else. And again, when we see a 5-wave decline, my inclination is to consider that an initiation move rather than a completion move. So if we've bottomed here to some degree, I would tend to look at this as an A-wave bottom and working on a bigger B-wave rally. Now, the good news is, in terms of from a trading perspective, is that this move off of the low, off of the late 2022 low, counts nicely as a potential 5 up. And so with that, it does give us some indication that we will see some upside from there. But from the, meaning that we'll see some continuation higher, that this move that we saw into the January high will not complete the last of the corrective rally here that's expected for Solana. So how I'm viewing this again with the 5 down is that this is an A wave, a bigger intermediate A, and then our initial move up is a minor degree A wave. We have a 3-wave pullback, a 3-wave rally, and now I'm looking for a 5-wave decline to take price into a lower low beneath the March low as the A wave low to complete a C of B, and then looking up in a C wave. We don't really have an optimal downside count here off of this B wave high. We did start really nicely here with a nice 5-wave move to the downside, but then this has sort of morphed correctively. So at this point, I'm looking for this C to shape up as an ending diagonal, and that entails here, again, we measure the 1, extend down from the 2. Yeah, our 3 would target the 1490 region. Our wave 4 would come up to 18, and our 5th wave can take us down. Essentially, I'm looking for price to take us into this 0.618 to 50% retrace support of the A wave here that I'm showing with these red lines. So that's a measurement of the A wave. And so I'm looking at bigger support as this 0.618 to 0.500. For those who followed in the room, you see this red box here. This was a short trade that we had gotten into really near the highs of this, and I announced, taking some profits when price, came down here into 19. We have since bounced correctively, and now, I've moved my stop up to just above this high. But as long as we're staying below this week's high, Solana looks to be set up for some substantial downside continuation. If we break back above this high, this really opens up a lot of complexity here, as that would mean from the January high, we have 3 down, 3 up, 3 down. That's very complicated there. It could mean that we're forming a broader triangle at that point for this B wave. But So that's it for my commentary on Solana. Okay, good. We still have a lot of you with us here, so for those of you who remain, I just want to say thank you for attending. Again, I'm endeavoring to do one of these every month as just a broader update of the view of the cryptocurrency market. I hope they're educational and informative. Again, for those of you who are in from Twitter, I want to encourage you to check out our Crypto Waves room at Seeking Alpha, or the cryptocurrency service on Elliott Wave Trader as the home site. We are doing this, during market hours every day, and members have the opportunity to request charts and chat and ask all the questions they would like about all of the analysis and charts that we do regular updates on, and in addition some trading signals. So. Thank you, everybody, and have an excellent rest of your week. And I will see you back next month sometime. Take care.